decline. One sector or one space that people are expecting will see a huge impact after demonetization is the housing finance companies. The management at PNB Housing Finance Limited is now joining us, Mr. Sanjaya Gupta. Sir, if you could just tell us about what's happened in this last 45 days. How have things changed? Do you see any major changes to the volume number that the sector was doing?
Good morning. First and foremost, we never saw a huge sort of a trough which was expected. Yes, there has been a straight line, there has been no growth, and also on the delinquencies and the bounces which are not NPAs, we saw an upsurge in the bounce rates, but the curing rate of those bounces were pretty alright in November, and the best thing is that December is seeing almost prior to demonetization bounce rates and curing rates, and the forward flows are much in control. So I think things are settling down, and we expect that even the growth should come back in few months or a quarter or two.
Right. In India, housing finance businesses have been characterized as structural drivers, but there was probably a hiccup because of the recent demonetization. Once the currency is back in circulation, people forget what has happened. Do you think the growth would just normalize on its own for the sector?
Well, I think that the market size is going to be redefined, because all the cash transactions, if they are going to get out, and the formal sector is the only way that the latent demand can be fulfilled, then the market size is going to grow tremendously, and I am pretty optimistic that things will fall in place. Give it some time to settle down, and both the real estate developers on the supply side, and there is an inherent demand and a shortage, the marriage will happen and the markets will become far better than what they were.
Right. What do you think will happen to the loan against property market? A lot of concerns that may dry down. Any sort of initial indications that you can pick up from the industry data?
Well, the industry data is not out yet, but I can share with you that, we are conservative players. We also do quite a bit of loan against property. 18% of our portfolio is contributed by that product. But if you are conservative in your underwriting programs and in your product design, there's not much to sort of fear. And the delinquencies or the bounces on the LAP portfolio are not very different from the housing loan portfolio.
Right. In terms of asset quality issues, do you think if there are any problems of payment by people because of currency issues, because of income levels getting changed, do you think it will just be near term in nature?
Certainly, and let me also tell you, there is a tendency in the market, in the industry, for forward flows in Q2 and Q3, and then curing the portfolio in Q4. So if you see a higher number than Q1 in Q2 and Q3, there is not much to be worried upon, because that's a normal tendency of the market. That's the trend in the market, that we leave collection in Q2, Q3, so that we can enact SURFACE on those delinquent accounts and recover our monies in Q4. So I don't think there's going to be much different numbers if we were to estimate March 17 numbers on NPAs.
Right. In terms of growth coming in, so a lot of the growth for the sector was coming in from self-employed people as well as non-housing loan. Even for your company, that has been the trend. Do you believe that will slow down and focus will shift towards salary and probably stable income sort of group, which would tend to increase the demand?
Well, Prakash, just let me clarify. Our growth has been not only coming from loan against property or self-employed segment. Our growth is very well distributed between salaried, home loans, LAP, SENP, etc. So the growth rates are not only driven by self-employed people or by LAP portfolio, they are also driven by home loans, and there is a mix that we sort of manage and maintain as per our plans, and that is happening. I mean, at least till Q2 it has happened. Q3 I'm sure it will happen. And yes, the growth rates will come down for the H2 of this financial year. But I think from next year onwards, people will plan it as per the situation or the environment which is available for them to do business in. And the growth rates will be far smarter than financial year 16-17 and 17-18.
Right. So, do you think the average ticket size for your housing loans will change now?
No, I don't think so.
If the cash component of any home transaction becomes lesser, does it not impact the amount of loan the buyer takes?
Well, let me assure you, none of the formal financing institution finances the cash component. And if that cash component is going to be added in the disclosed transaction value, the loan amounts will only go up and not go down.
Right. So you think that the average ticket size will increase going ahead for housing loans?
Well, I don't think so, because you know, in formal lending, you are lending in segments or in geographies where the cash component is minuscule, and we don't factor that. So the LTVs are low when you compare it to the market values. When you compare it to the registered value, they might be bordering 65-67%, but actually they are far lower.
Right. Which category of home loans do you see the fastest growth coming in, say in the next financial year?
Well, as I said, you know, if this entire parallel economy is weeded out, because demonetization is not the end, it is a means to an end. And if that happens, then I think, and as I said previously also, the market size is going to be redefined. And if the market size is going to be redefined, the self-employed people will also be added in the formal sector. And mind you, 70% of housing gets created in our country by the self-employed segment, and only 23% of that is getting penetrated through a formal home loan. So if the penetration levels of salaried and self-employed become better than even the mortgage penetration to GDP, which lingers at around 8 to 9%, might go up in the future.
Right. So what kind of growth rates are you penciling in for FY18 when it comes to the different segments? Loan against property, the small and medium loan sector loans, and the housing loans.
We will start our planning in Q4 for the next year, and being a listed company, I cannot give on on a TV channel my numbers that we are thinking and drawing on our drawing board. But you will see I think financial year 17-18 is going to be far better than 16-17.
Right. So we've spoken to a lot of real estate players post demonetization and, try to get their view. So their view is that, with a lot of new laws coming up for the real estate sector, plus with demonetization coming in, they expect the volumes to increase quite a bit. Prices may fluctuate 10-15% here and there. But overall, they expect that as the industry is moving towards the organized phase, the volumes would drastically increase, the transparency would drastically increase. Do you think all of this would mean that a lot more easier housing loans can be taken, or a lot more volumes of housing loan for the industry can improve?
Yes, a combination of good, changes like the GST, RERA, demonetization, things like that, if put together and with transparency coming in both on income and on valuation of the properties, only things will have a positive sort of a phase in the future rather than negative.
Right. In terms of the upcoming budget or any further policy announcements, do you expect that with the sort of hit the real estate space can take by demonetization, there could be some SOPs which could come in for housing for all, or at least for lower ticket size housing that could itself boost the sector?
Well, I don't want to comment on any hit, etc. You know, it is our own doing. But yes, in the budget, I think affordable housing will be a focus area for the government, and especially because the Prime Minister has already said housing for all by 2022, something is going to come out concrete in the affordable housing sector. And I think the definitions are going to get further refined in the budget, and we will have lesser of dichotomy and a far better pace of growth and streamlining of processes.
Right. In terms of rates coming down in the system, that definitely will benefit the sector, which has already happened, and maybe in some time even banks would start to pass on that rate cut.
Well, I will just request everybody to look back in the current year. The rates did come down by almost about 110, 115 basis points, but the volumes never sort of grew significantly. So it is not only the rates of interest or property prices which define the velocity of transaction. What defines to me the velocity is the general sentiment. And if the sentiment in the entire ecosystem, socio-political, economic environment is positive, then there is an inherent demand, and there is a pent-up demand of about 20 or 22 million dwelling units in the urban centers. And the true homeowners will come forward and will start buying. So it's more, I think, sentiment driven than now interest rate or price, property price driven, because both interest rates and property prices are at a reasonable levels. And I think if there's positivity, there's continuity, there's stability, then the tenacity of this demand will come forth and we will see it more visibly.
Right. Sir, thank you so much for taking out time for us. Always a pleasure talking to you. That was the management at PNB Housing saying that things would start to look up very soon. Taking a break, back in 2 minutes.